people are waiting for price to go up before they come back in. So in this weird world where price is flat, that doesn't bring anybody in. So something has to change. Stock market's going up, tech stocks are going up, liquidity's going up, China's starting to print money, the US are cutting rate. I mean, what more do you need? So it's a matter probably of just patience. Sol outperform, ETH outperform Bitcoin. That's usually what happens. It should just continue higher. The market likes to exhibit pain. And it's when people get bored or people lose focus or people think, oh, you know, I'm going to go and find something else, is when it all goes off. It always happens this way.
Raoul Pal begins by highlighting the critical role of liquidity in driving market performance. With liquidity on the rise globally, China ramping up money printing and the U.S. signaling rate cuts, the stock market, especially tech-heavy indices like the Nasdaq, has responded positively. Despite these favorable conditions, the cryptocurrency market has remained subdued. Pal notes this dichotomy, attributing the crypto market's stagnation to hesitation among investors awaiting price confirmation before re-entering the market. Pal argues is a key driver of asset prices, and its current trajectory suggests a favorable environment for risk assets, including cryptocurrencies. However, the market's behavior, particularly in crypto, reflects a deeper psychological barrier. Investors are reluctant to act in a flat market, waiting instead for a clear upward trend to emerge.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Everything points to the same thing. Liquidity is coming. Now you can see it in the stock market. The Nasdaq's going up, but crypto's been heavy, and I don't know for what particular reason it's been heavy. For some reason, it's heavier than other assets, but nothing in my work suggests otherwise. On the asset management side, on Exponential Age Asset Management, XPAM, we hear the same thing, and I hear it from everybody I speak to, is people are waiting for price to go up before they come back in. So in this weird world where price is flat, that doesn't bring anybody in. So something has to change. Stock market's going up, tech stocks are going up, liquidity's going up, China's starting to print money, the US are cutting rate. I mean, what more do you need? So it's a matter probably of just patience. Sol outperform, ETH outperform Bitcoin. That's usually what happens. And so I don't know, because I don't want to give price targets, because you get in that stupid game of people then believe the price targets and then it doesn't happen, and then their vision of their future selves, that Porsche they were going to buy is now ruined and it's my fault because it didn't get to the price. It's all nonsense. But you could probably say that Bitcoin triples, quadruples from here. Something like that. And Solana probably 8x's plus, that kind of range, and ETH somewhere in the middle. We start with the don't fuck this up thesis that I talk a lot about, which is the majority of your capital should be in the top 3 to 5 tokens. So what I do personally is I then look at all of the price action between the top 3, Solana, ETH, Bitcoin, look at the cross rates and choose the strongest one. It has been Solana. And I've had that bet for a while, and it's been the strongest trend. So that is why I have Solana. Solana has a good community, great UX, good tech, it's fast, it's cheap, and it has had some breakthroughs in chain usage, meme coins being one of them. The ecosystem is deepening and broadening, much like ETH was doing this time last cycle. So, okay, that's a great place to park a larger amount of capital because it's relatively safe.
And you worked out really well until now.
Yeah.
Are you still confident about the great Sol trade for this cycle?
Yes, I am. I'm sure it'll do absolutely fine. I mean, I see nothing but success going on that chain and positive vibes. The question is whether the next chosen one outperforms it so significantly that you're forced to take that trade, which is much riskier. So it's not the bet that I would ask people to do full size. And for me, it's sui. And it's not because I'm on the foundation, but it's because I could have been talking about this forever because I was on the foundation, but I didn't. I waited till I saw the confirmation price action, which was this general outperformance, started versus Solana, ETH, Bitcoin, and then every single token started breaking out. And at that point, I felt comfortable saying, listen, I think this may be the chosen one. Sure, there'll be other stuff that outperforms it. The market likes to exhibit pain. Mm-hmm. And it's when people get bored or people lose focus or people think, oh, I'm going to go and find something else, is when it all goes off. It always happens this way. And 2020 was like that. Last year was like that. People forget last year was almost identical. In fact, when you overlay the charts of Ethereum now versus Ethereum then, Bitcoin now versus Bitcoin then, last year, it was identical. So it should just continue higher. Now, it's correcting today, but this is short-term noise, but generally it should keep going up. And everything in macro says it should keep going up. So let's see. The scarcity is not the tokens. The scarcity is the attention. There's only a limited amount of attention. There's 500 million active crypto wallets of how many active people in crypto, how many active people in meme coins. So right now, let's say there is 1 million active people in meme coins. 1 million people have to put their attention, and what they tend to do is focus attention where other people's attention. So Murad tweeted about a bunch of tokens, they all go up because everyone's desperate for the banana zone and they want, so attention moves around. So even though there's 10,000, none of those get attention. The real game is capturing the attention. So then if you capture the attention and then the liquidity continues to kick in, I think China's got another press conference coming out shortly, tomorrow or something else, to talk about yet more measures. And we've got everybody else to start cutting rates and injecting liquidity. Well, then the attention focuses, tokens start going up, other people come in, they start chasing meme coins, then people go out the risk curve. Well, if that dog token's going up, then I'm going to buy this dog token. That starts pushing up, and then the game is played. It always plays out the same way. So you're attention is still a bit split, but you're kind of seeing who the winners are going to be in the meme coin cycle. Obviously, there'll be new ones. So the attention is focusing, and now you need just the other catalyst to just push it, and then everything blows.
Pal connects the crypto market to broader socioeconomic trends. He paints a picture of generational challenges, including the inability of many millennials to afford homes or save adequately for the future. These pressures, coupled with the promise of life-changing returns in crypto, make the market a beacon of hope for many. Pal stresses the importance of managing expectations. Investing in crypto requires a long-term perspective, resilience through volatility, and an understanding of the risks involved. He shares his commitment to educating people about these opportunities while emphasizing the need for caution and strategic planning.
That people can't afford a house. The average millennial is 35 years old. They can't afford a house. They're not having kids. I mean, the rate of having kids is plummeting. The number of people who are not living in their own place, i.e. they have to share a place. All of that stuff is just showing how stressed people are. And asking them to save and make 10% returns on the S&P 500 for the next 20 years just ain't going to cut it. And so I can see how stressed people are. People are getting polarized. And I want to make sure that if I make money out of this, nobody turns around to me and says, well, why didn't we? Oh, it's the insiders, it's that. I did that before, with the crash in 2008, 2012, we all made money and people are like, what the fuck? A, why didn't we know about it? And then it was like, well, why didn't we make money out of it? And I'm like, I'm not going to do that. So I have to publicly take a lot of risks by trying to explain to people the opportunity, how to navigate it, whilst also making sure they understand there are no certainties and that I am taking a risk by doing this and my own money's on the line. in fact, 100% of my liquid net worth and all of the businesses that I've built. Doesn't matter if we get the banana zone to me or not, as long as the adoption of the technology continues, because the value will go up. But the banana zone is that point that it becomes emotional, because you really can make a difference to your financial situation just by doing nothing. It's one of those rare moments. I was speaking to Stephen Bartlett about this. I'm like, some people, if they get this right, they start with enough capital. There's no point even starting a business when you're investing in crypto. You can literally not do any of the shit that you and I do. You could just buy some tokens and go traveling for 5-10 years and come back rich, right? And we just spend so much time around this space. You don't need to do any of it. So yeah, I want to help people. I want them to get to the other side. I want to be able to change people's lives and get out of the trap that everybody's in. Now, I'm not doing that trying to be hubristic or think that I'm some great hero figure. I just don't want somebody to come to me and say, well, why didn't we know? My view has always been that rates are probably coming down to 2%, because that's the everything code. That's the trend rate of GDP growth. And you need to kind of bring it down to that. So my view is they'll try and get rates down as much as possible, but the economy is really quite strong. So will they be able to bring it down enough? Well, it doesn't matter. So 2016, rates, the Fed raised rates once in 16 and then just went on hold. They didn't add liquidity. The Chinese added tons, as did, I think, England after Brexit. That was enough to cause the 16-17 mega cycle. So it doesn't require the US and it doesn't require rates, because rates aren't liquidity. Liquidity is a separate thing. I just take the market cap of crypto, put it in a log regression channel, and it gets you there. You do the same with Bitcoin, back it out as maybe a Bitcoin dominance of 50%, 40%. You kind of get there. It's like, you look at the wallet growth, you kind of get to those numbers. So it's like, yeah, that makes about sense.
Pal's analysis concludes with optimism for the crypto market. Historical patterns, macroeconomic indicators, and the increasing adoption of blockchain technology all point to a bright future. He likens the current phase to the pre-2016 cycle, when liquidity injections catalyzed a massive bull run. While acknowledging short-term noise, Pal believes the macro environment, marked by falling rates, increasing liquidity, and innovation within the crypto ecosystem, sets the stage for a sustained uptrend. His investment thesis centers on patience, disciplined capital allocation, and focusing on assets with strong fundamentals and community support.
Please like and subscribe my channel.